Good evening and Happy New Year from Hong Kong, and welcome to our January 2026 Asia Frontier Capital webinar. My name is Thomas Hooker and I'm the CEO and founder of Asia Frontier Capital. With me today are Ruchir Desai in Hong Kong, who is managing with me the AFC Asia Frontier strategy, Ahmed Tabaqchali, the chief strategist of the AFC Iraq Fund, is today in Amman in Jordan, where it's pretty cold apparently. Scott Osheroff, the Chief Investment Officer of the AFC Uzbekistan Fund, is in Uzbekistan, where it's also cold. And Vicente Nguyen, the Chief Investment Officer of the AFC Vietnam Fund, joins us tonight from Ho Chi Minh City. This webinar will last about 45 minutes, and thereafter you will have the opportunity to ask questions during our 30 minutes Q&A session after the presentations. You can submit your questions online through the Q&A icon at the bottom of this Zoom window on your laptop, PC, or mobile phone. And please note that this webinar is an overview of our investment strategies and investment universe and should not be taken as an investment advice. Performances in the last quarter of 2025 and the entire year of 2025 were great, and especially for our Asia Frontier strategy and AFC Iraq strategy, which both reached new all-time high NAVs by the end of December 2025. And the good news is that the start into 2026 continued with great performances like in 2025. Especially our Uzbekistan fund strategy is performing so far very well this month. Ruchir, over to you for the outlook for the Asian frontier markets and our AFC Asia Frontier strategy.
Great, thanks, Thomas, and Happy New Year to everyone, and Happy Investment 2026. We just get started. As Thomas mentioned, 2025 was a great year again for the AFC Asia Frontier strategy and also for Asian frontier markets. And the year's begun on a strong note. The strategy is up about 5.5% so far this month in the first 3 weeks of January. So very strong start again. The momentum is continuing into the new year. But as the chart shows you, performance across the board is very strong in many of our markets, similar to 2024. Pakistan, but Pakistan led returns again for 2025 after being up 87% last year. It was up 50% dollar terms in 2025. But not just Pakistan, Vietnam, Sri Lanka, Kazakhstan, Oman, even Iraq did pretty well, and that led to a 20% gain for the AFC Asia Frontier strategy, which is the third year in a row of 20% or more gains. So very strong returns in the last 3 years for the strategy. And again, once again, it's not just one or two markets or a few stocks which led gains in 2025. Again, returns were broad-based from Pakistan, Sri Lanka, Central Asia, Uzbekistan, Iraq, Mongolia, etc. So again, very broad-based and diversified returns for the strategy in 2025. So again, this is the third year in a row of very strong returns for the strategy and for the markets compared to especially emerging markets in this part of the world, which have kind of underperformed on a relative basis. And as the next slide shows you, as I was mentioning, the last years have been very strong. 3 years in 2023, the fund was up 27%, in 2024, up 23%, and last year, up over almost 20%. So almost up 90% in total returns in dollar terms in the last 3 years. Of course, in general, global markets have done well in the last 3 years since the bottom in 2022, but we've outperformed all the global benchmarks. So it comes down to pretty good stock selection and country allocation for the fund as well. Even though the returns have been strong for the last 3 years, one might argue, are we concerned about valuations, or it's been a strong run? Which I'll talk about later as well. But I'm not so concerned because when I talk about the outlook, I think this is only the start of a re-rating for Asian frontier countries like Pakistan, Sri Lanka, Bangladesh, Vietnam, Central Asia. So I expect not just 26, but also the next 2 to 3 years being pretty strong for our markets and for the strategy going forward. I wouldn't be surprised if you see double-digit gains again in 2026 for our investors. So just to wrap up, as the slide shows you, very strong returns and the outlook remains positive. I think in the following slides, I'll just talk about what drove gains and how did some of our calls do, and I'll tie it into the 2026 outlook. So at the beginning of 2025, we mentioned that we expect Pakistan and Sri Lanka to again rally in 2025, and that's exactly what happened or how it played out. Pakistan was up 50%, as I mentioned, dollar terms. Sri Lanka was up 34%. So pretty good run again for the last few years for both countries. And to be honest, I'm not surprised by the rally because both countries face a pretty tough time politically or from a macro perspective, for between 2017-18 to 2023 to first half of 2024. But since then, you have political stability, macro stability, attractive valuations, and most importantly, the economic growth coming back, leading to a pretty strong recovery in earnings momentum, leading to a re-rating in both markets. And on the next slide, just talking a bit about more Sri Lanka. GDP growth has been surprising on the upside for the last probably 6 quarters now. And for the third quarter of 2025, these are the latest numbers available. GDP growth was 5.4%, again, ahead of expectations. Of course, as many viewers would be aware, they had a pretty serious like cyclone last month, which caused floods and damage to a lot of infrastructure. So yes, I mean it's obviously it's realistic to expect some GDP impact in the probably fourth quarter and first quarter of 2026. But I'm not so concerned because momentum in the on the economy is so strong. There's so much positive sentiment of consumer confidence and business confidence after a long time. And plus the macro and politics is much more stable now compared to, even 2.5 years ago. So I don't see that impacting the broader recovery in the economy. Plus, the government has a lot of fiscal room because they've taken the tough measures because the IMF program, because of much more, I would say, probably mature government, taken the fiscal measures. They have a lot of fiscal room to spend on reconstruction activities for the next probably 12 months. And so I won't be surprised because of the reconstruction activities in Sri Lanka, you'll see GDP growth come in at 5% or more for the full year of 2026. And therefore, the strategy also, just a couple of weeks ago, we initiated a position, the largest construction company in Sri Lanka, benefit from the reconstruction activities across the country. So tourism also has made a pretty strong comeback, as I was mentioning. 2025 saw the all-time high tourist arrivals at 2.4 million. And this is despite the floods that happened or the cyclone hit that happened last month, December 2025. Saw I think almost all-time high monthly arrivals, despite the concerns about cancellations and all the concerns about that. So very strong momentum. Even in January, in the first 3 weeks, tourist arrivals have been very strong. So very strong recovery in the tourism sector in Sri Lanka, which is helpful for the overall economy and also for foreign exchange reserves. So Sri Lanka is one of our top country picks from a 3 to 5 year view, and it's basically firing on all cylinders, and that's why it's the second biggest country weight for the strategy. And as the next slide shows you, let's talk a bit more about Pakistan. Yeah, I mean, they've had a very strong run for the last almost 2.5 years now. 2024 up 87% in dollar terms, last year 50%. In fact, this year already the market's up about 8% in dollar terms. So one of the best performing markets in the first 3 weeks of January. And again, I'm not surprised because you've seen, as I was mentioning, you've seen economic momentum come back in the country basically after 5 years. Not much happened between 2018 to 2023, first half of 24. So you're seeing that momentum come back only now. You're seeing the impact of the lower interest rates, which have been cut by on more than half in the last probably 18 months. The positive impact is only being felt now. And even, Pakistan was struggling with some floods last summer, but the impact is not so bad as what the market or investors expected. Inflation is pretty much under control. And that's the reason why the State Bank of Pakistan reduced interest rates by 50 basis points last month. In fact, the market's expecting another 50 basis point cuts just on Monday with the central bank policy meeting is next Monday on 27 January. And that's led to another rally in the market. And the important thing is the earnings are still very strong. The outlook for earnings is very strong. They're coming back after a long time, and valuation is still attractive. P ratio for the whole market is about less than 9 times on a forward basis. And across the board on a just bottom up basis, you're still seeing single digit P ratios in many important sectors like cements, consumers, banks, etc. So this remains the strategy's largest country weight. And again, I mean, I would not be surprised if you see a double-digit rally in Pakistan this year as well. So a lot of confidence on the ground, a lot of investors moving, especially domestic investors moving from bank deposits and fixed income into the equity market. In fact, the proportion of domestic investors or domestic funds invested in the equity markets is about 14% of total assets under management, which fixed income plus equity. And this used to be, I think, more than 40% in 2016, 2017. So there's a lot of room for domestic investors to still invest in the equity market despite the run-up. And again, as I mentioned, the sentiment on the ground is very positive. More, I have not seen that positive sentiment in a long time, not just in Pakistan, many of our markets, which I'll talk about later. And just a bit about Bangladesh for 2026, a bit of the outlook. Can you go, next slide, please? Before Bangladesh, we also mentioned at the start of 2025 there are Central Asian names that the strategy holds should also re-rate because of not just what's happening on Russia Ukraine, which I think no one, I don't really have a view on that, but seems like there's some momentum on there. We'll see what happens. But in general, they've recovered from the initial hit they had from the war in Ukraine, from a high interest rate, high inflation perspective. Macro is anyway quite strong, and fundamentally the companies that we own and also they are part of the markets over there are very well run. And again, it comes down to earnings growth. Earnings growth has been very strong for the Georgian banks that we hold, and also for the Kazakh bank we hold, and also for the largest uranium producer the fund holds. So pretty strong momentum again. As I was mentioning, net profit growth, earnings growth is quite strong compared to other emerging markets in this part of the world, and pretty strong recovery or re-rating from the stocks. I think the only stock in the strategies portfolio which didn't perform last year was Caspi. But I won't be surprised if you see a bit of re-rating in this name, maybe towards second half of 2026 as interest rates in Kazakhstan come down and maybe they integrate the Turkish acquisition successfully. And also the AFC Uzbekistan was up more than 20% in 2025. So some momentum, or quite a bit of momentum over there also, as Kautal mentioned to you in his presentation. And just coming a bit to the outlook on Bangladesh, I mean, on the next slide, as I mentioned, Bangladesh has been a bit of a dark horse for me in the last probably 18 odd months. And you're seeing some momentum now in the market. The market's up about 5% so far this month. Basically, the catalysts are in place for a very strong re-rating in Bangladesh. The macro stabilized in terms of the current account, inflation, interest rates have peaked out, in my opinion. And also the foreign exchange reserves are fine, remittances are strong, export growth is stable. So like I said, the catalysts are in place. Valuations, as the chart shows you, the blue line is the MSCI Bangladesh Index, that's the P ratio, 10 times. It used to be 16, 17 times, 2019. The index has gone nowhere. The economy has gone nowhere. So basically, this reminds me of the similar playbook we had in Pakistan and Sri Lanka 2.5 years ago. Pakistan and Sri Lanka as well, you had stable macro. The macro stabilized, interest rates peaked out, inflation peaked out. Things were overall okay on the ground. And the big catalyst that people or investors were waiting for, or the market was waiting for, the big rally happened in both countries, Pakistan and Sri Lanka, was once the parliamentary elections took place. And you saw a massive rally in both countries last year, 2024 especially. I think the same thing had happened in Bangladesh. The elections are next month on 12th February. And it's quite likely that the elections will be held quite successfully. And you could that all the investors, business people, companies, in terms of their decision making, I think they're all just waiting for the election. And once they see some clarity or some incremental positives on the policy making front, you could see the market start re-rating because, as I mentioned, valuations are attractive, the companies are well run, the fundamentals stable, the companies are not leveraged, pretty strong, in fact, very strong return on equities, very strong brands. And in fact, in the September quarter, third quarter of 2025, results for our companies were quite strong in Bangladesh. You saw about 14 to 15% earnings growth across the board for our companies. So it's not like the economy is crashing or, it's in recession, the minus 5% GDP growth. They're still having about 4 to 5% GDP growth. And some of the sentiment is coming back or getting more confident. So this is a market which stands out for me. So I would not be, I don't want to put a number to it, but I would not be surprised in 2026 you would see a strong double-digit gain in Bangladesh, which will be good for the strategy. And we've been increasing our weight, obviously in 2025, but also in the last, in probably 2 weeks, we've increased our positions in Bangladesh also to benefit from potentially a strong rating in the country. So this is my top country pick just from a return. Not that I'm not positive on the other countries, but from a return perspective, I think Bangladesh can really see a strong rating this year, and this is my top country pick from a performance perspective for 2026. And just on the next slide, yeah, so it's in general, broadly, I think which I mentioned in the initial parts of my presentation. Many of these countries, South Asian frontier markets, Central Asia, even Vietnam, they had a tough time between 2018, 2023 from macro perspective, from political perspective. The earnings or the economy could not really grow. There was always some issue or the other. But after a very long time, you're seeing across the board, not just Sri Lanka or Pakistan or Vietnam, across the board in our markets, Iraq, as Ahmed will mention to you, even Uzbekistan, as Scott will mention to you, across the board in our universe, we're seeing political stability, macro stability, and that's giving a very strong platform for earnings to grow, which is obviously the most important part for valuations and for the market to re-rate. So earnings is coming through in a very strong way, as this chart shows you, double-digit earnings, mid-teens to high double-digit earnings growth across the board in our key markets, which we've not seen for a long time. So this is going to be a very important part for for the strategy to continue gaining or do well for the next couple of years, and especially in 2026. Uh, as I mentioned, we were on the ground last year in many of our countries, Bangladesh, Pakistan, Sri Lanka, well, not Pakistan, but Bangladesh, Sri Lanka, Kazakhstan, Uzbekistan, Vietnam, Iraq, etc. So on the ground, when you speak to people or meet companies, you can see that confidence in the corporates or in the consumers, and when you're out in the hotels or restaurants. So yeah, strong earnings momentum, strong economic growth, and also at the same time the valuations are not stretched. It's not like you're buying names at 25 times, 30 times, like some other markets, or you're out of ideas because valuations become very high. And as the next slide shows you, that's exactly the case for the strategy. Even though the NAV has reached an all-time high for the second year in a row, in the end of 2024, the NAV reached an all-time high. In the end of 2025, the NAV reached all-time high, but the P/E ratio of the fund is 7 times. So yeah, that's one is because the earnings have come through pretty nicely in the last 12 to 18 months. But at the same time, valuation is still discounted compared to where they were, especially when frontier markets were very hot in 2016, 2017. So, for example, Sri Lanka still trades at 10 times, used to be at 14 or 15 times. Pakistan's about 9 times. At the peak was at 12 times. Vietnam forward multiples about 12 times. At the peak was 18 times. Bangladesh, I just mentioned to you, was 10 times, but it should be at 15 times. Central Asia, single digit P ratios versus 8 or 9 times before the war in Ukraine. So all the catalysts are still in place, and the catalysts are in place in a very good way. You've got low interest rates, stable politics, stable economy, earnings coming through. And as I said, the confidence on the ground amongst the domestic investors is very strong. So that's very important, especially in our markets. It's not like the investors are bearish on the market or bearish on the economy, but they're very positive on the outlook. So that's one very helpful part for for the strategy to continue doing well in 2026. So at the end of 2024, I mentioned in a report that we won't be surprised if the NAV reaches all-time high at the end of 24. At the beginning of 25, we mentioned we won't be surprised if NAV reaches a new all-time high at the 25. And again, I think I would say that I won't be surprised if the NAV reaches a new all-time high. Of course, I'm not talking about a single digit gain, I'm talking about double digit gains again for 2026. So I'll stick my neck out again. That shows the confidence that we have in the strategy and in our markets. So I would not be surprised that by the end of 2026, you'll see a double digit gain for the strategy again, because of the confidence we have in the outlook for our markets. And just on the next slide, just talking a bit about I mean, I don't want to go too deep into it. We don't have much time to talk about this investor strategy in detail, but broadly, being on the ground is very important for us. And this is just a bit of a snapshot. Me and the Central Bank of Sri Lanka last month in December, meeting the governor. Then we go in the Halik Bank headquarters in Almaty in Kazakhstan, which is the Halik Bank is the largest private commercial bank in Kazakhstan. At the FPT headquarters in Hanoi, which is FPT is the largest software outsourcing company in Vietnam, doing $1 billion in revenues, growing at almost double digits in terms of earnings. So like I mentioned, we were across the board in many of our countries last year, as this table shows you. And of course, we're going to continue with our travels this year as well. I'll be in Vietnam first week of February, and then other countries following on rest of the year. So I just want to wrap up on the next slide. This is exactly the slide I presented in September, in October in the previous webinar. Nothing has changed. In fact, I would say this is exactly the slide, somewhat similar slide I presented in January 2025. in terms of my country calls, in terms of broadly why I'm positive on the markets. So yeah, I think basically the AFC Asia Frontier strategy is in a sweet spot. It's not been in such a good position for a long time. As I mentioned, the markets are very well positioned for a strong re-rating. And as the bolded headline mentions to you just below the table, our countries are now on a strong earnings and economic cycle, which I think has only begun. Bangladesh can see a strong re-rating this year. Sri Lanka continues to be a top country pick. I think Pakistan is in the midst of a multi-year bull market, even though they have a strong return. So I won't be surprised again, double-digit gains in Pakistan this year. As Scotland mentioned, Uzbekistan is seeing a very strong turnaround, especially for January. The fund is up nicely, the strategy is up nicely, as you mentioned too. Central Asia, Georgia, and Kazakhs remain solid. Vietnam, again, doing 8% plus GDP growth, as Vicente will mention too. So that's doing well for the strategy again. And Iraq is a transformation story with a pretty strong outlook, despite again strong gains for strategy. But as Ahmed will explain to you, the outlook is still quite positive. So I don't want to make it sound very rosy, but in general, we are quite positive on the outlook for our markets, and we've not seen this kind of sentiment before. So yeah, I just want to wrap up by saying the outlook for our markets is very positive, and there's a link to strategy and outlook report for 2026. So I think all the listeners and viewers will get the PDF of this presentation. So you can just click on it, and it's also on our website. So I recommend you read it, and it'll give you much more idea or much more in-depth information as to why we're positive on the outlook for our markets for 2026 and beyond. So with that, I'll hand over to Ahmed, who is the chief strategist of our AFC Iraq strategy. Over to you, Ahmed. Thanks.
Thank you, Ruchir, and thank you all, and welcome to this webinar. And once again, Happy New Year to everyone. As Ruchir mentioned, the Iraq strategy has been fairly successful, and I want to go sort of over the reasons why it was so good last few years and what is the outlook. Now, obviously, it's quite easy, I think, for almost everyone to get very bullish after a few great performance and to expect that the future is going to be a repeat of the past. Now, obviously, there's always that risk, but I want to put this in context and why do I see a continuation of that. So as you can see, we've had a wonderful 3-year rally. Overall, the strategy was up something like 253% versus 224% for the index. Each year we had, a gangbuster year, less of a gangbuster, and then a very good year as well. So the question is, what I want to do is what next after such a rally? And those who might have read or seen sort of our piece the last few years, the same question was asked at the end of 23, beginning of 24, 25, and now for 26. So I want to put it in context. That's 3 years. So next slide, Peter, please. So the first things I want to do is, as the slide is coming to life, is looking at the index relative to its own history. The phenomenal return is only made up by a fact that we've had a brutal 7-year bear market. The market peaked in January 2014, a few months before the ISIS invasion. And then the market, we've had 7 brutal years in a sense, in which the cumulative decline was something like 66.6% on a monthly basis. And for those who are inclined toward biblical stories, as you know, sort of 7 years, brutal years, followed by hopefully 7 good years. If that's the case, then we've only into our 4th good year. And also there is a number 666. So anyways, I'm not going to go over that. Now, the index relative to history, so in a sense, we only regained where we were in 2014, in October 2024. And even by this end of last year, after a wonderful rally, we're only up 20% above that peak. And I think this puts us into the next slide. Peter, please. And the other thing is relative to global markets. As you can see, it shows you, it starts to January 2014 in line with everything is normalized to that level. And you can see we barely caught up with the frontier market index. I still believe that given our history of conflict and given the destruction of the country and hence the rebuilding and the restructuring, it's still gives you a very good risk-reward profile that the strategy can give, or Iraq can give, to everybody who would look at it. Next slide, please. Now, repeating what was a performance driver and what will be the performance driver. As I said, the secular transformation of the economy. It's very difficult for almost anybody who does not come to Iraq or does not see it or only sees Iraq through the usual lens of the media coverage that always talks about bombs and this and Iran and that and so forth, and nothing about what is going on inside the country. Thomas saw this for his own eyes when he came in May of last year, and we gave you 4 travel reports that will show you how different the country is, one, compared to what people think, and second, how far the recovery the country can have. And you'll see that in a bit later. But the transformation of the economy is driven by 2 factors. One is the cumulative positive effects, and the word is cumulative, because these built on itself. I wrote about the first transformation I started seeing in 2019, and it begins then and it builds upon it. And every time it becomes better and larger and larger. And I think we are at the beginning of that thing. And the other one is the major development in a country that is predominantly cash-based, but mostly informal, going in towards formal and banking. And everybody who followed emerging markets and frontier markets when they began, one of the clues, one of the start of the economy's expansion has been the adoption of banking, because that brings with it the creation of credit, and then you have an expansion of the GDP and the economy. Next slide, please. Now, obviously, one cannot escape the perception where Iraq is, and also the leverage. Iraq is very leveraged to oil prices, but Iraq is in a way far more than an oil story. Nevertheless, they are now, as we've actually discussed since the beginning of last year, not this year, as we said that there are going to be headwinds, and these are the reversal of oil prices from very strong into quite weak. And you can see the line. The green line on the right-hand side is actual oil prices, and yellow line are expectations for future oil prices. Having said that, last year, Brent crude was down 15.3%. Depends on which yardstick you use. Bloomberg ended the year with an article that's saying that crude had the worst year in a decade in terms of price declines of crude. Having said that, that was the same year that the AFC Iraq strategy was up almost 17%, and the index was up 13.7%. So it's really more than oil. Yes, oil plays a factor. Yes, high oil prices would, sort of like pump up or boost the cyclical ones, while negative oil prices will dampen it. But that is, I think, as far as it goes. Obviously, a 2-year, a 3-year huge price decline, that's a very different story, far more than this right now. But I think the interesting thing is, despite the current expectations for oil prices, I'm using, by the way, the oil price expectation as of end of last year, because now you have quite a different picture with Venezuela and with Greenland and so forth. Oil prices have jumped, but I'm not taking that into account yet. Even at the lowered expectation of oil prices, the rate of decline is slowing. So that, I think, is positive on its own right. Next slide, please. Now, in a sense, why do I think Iraq has a huge catch-up potential, and why I keep on going on, harping on about the word banking? Now, on the right-hand side, I'm looking at broad money as percentage of GDP and taking Iraq and its peers in comparison. So the Arab world, Iraq is in maroon, and Iraq is green, and you can see we are slowly catching up with the rest of the world. Now, what you'll see also is there is a blank. The data between a beginning of 79 and sort of 2023. And that is really the period when our whole economy and our whole country fell apart. And that is you starting with the Iran-Iraq war. I mean, people realize that Iraq is conflict, but no one really realizes how long that conflict has been. And you can see on the left-hand side, I'm starting it with the Iraq-Iran war, the Gulf War, the 13 years of sanctions, and the second Gulf War, and then you have the US invasion, and then you have the insurgency, civil war, and then, if that was not enough, you have ISIS. So in a sense, that gives you a scale of destruction that the country has seen. But by the same context, that is how far the country can catch up. And that's really why we think that Iraq is a transformation. Is in a way, we are almost reversing those 4+ decades of conflict, and it takes more than 3 or 4 years to do that. I recall last year, Thomas, in one of the webinars, mentioned that when he sees that kind of build-up, that is a decade kind of process. And it has started with the banks, and that's what I'm using broad money as percentage of GDP, because banks create credit. So that gives you one hand. Look on the other hand at the picture or the table on the left-hand side, which is market cap as percentage of GDP. And you look at it, if you look at the middle line, GDP estimates for 26, and you can see Iraq at the bottom is an anomaly. The fact that it's such a large economy and has not been expanded by the creation of credit. So it's pure cash economy. GDP you're looking here, and then when you're looking on the market capitalization, it's actually an oddity compared to almost every other pair. And if as we expect that the recovery will take place with the banks, i.e. banks begin to create credit and so forth, then that is reflected in their market cap. And that's what you'll see on the left-hand side. Most of these markets, until the last few years, all of them were pretty much dominant by banks. Saudi Arabia, with the listing of Aramco a few years ago, changed the equation in terms of the percentage, but all of them are predominantly were by banks. And I think this is really where I see Iraq going forward. And the final slide, Peter, please. The final one is repeating this thing again, is that one, the two dynamics we discuss are a long-term story. I mean, they're not a one-off stage, as I said. And if you can see the period whereby we were out of the world, that tells you how long we have. So I really see they are in the multi-stage, in a long-term process. There's a long way to go in terms of banking adoption as well as relative positive effects. However, having said that, our region is far from friendly. There are all kinds of stories going around, but as everybody who's watched the last few years, Iraq has been pretty much an island of stability, given the fact that what's going on in the region. But that has to be taken into account. We're extremely leveraged to oil prices, who have been very volatile. And as I said, there's a real risk that a sustained crash, and I mean crash just like 2020, for 2 or 3 more years, 2 years or more, will derail that transformation. I don't think it will completely derail it, but there is that risk. Having said that, I think I end it and pass it to my colleague Scott, who looks after a wonderful Uzbekistan story. Thank you very much, all.
Thank you, Ahmed. Good day, everyone. So, as I've talked about over the past few years in my monthly notes, is that the world is shifting rather dramatically, and it pays to have exposure to natural resources. You look at the bifurcation and the balkanization of the world, but the bifurcation between West and East. And I think you want to be investing in places that have resources and ideally a growing population. If you look at what I've termed the New Fertile Crescent, that is the area from the Middle East through Turkey up into Central Asia, including Russia and China. And Uzbekistan and Central Asia, of course, I'm biased saying this, but I do believe that it will become the most influential economy in Central Asia for sure. In due course, Iran, if something happens there, but in Central Asia specifically, Uzbekistan. I mean, they've got natural resources, they've got a relatively free market economy, and equally, they've got a growing population that they're exporting to the rest of the world. And this is a huge benefit. When I first went to Uzbekistan, I thought it could become sort of the Vietnam of the broader region. And to a degree, it will be. You're seeing a lot of attraction of investment, specifically in manufacturing for textiles and whatnot. H&M just announced this past week that they're going to open up an office there for sourcing. There's going to be a transport corridor between Uzbekistan and Poland for moving goods to Europe. So certainly things are happening in this regard. But when you spend time on the ground, it becomes very clear that one of the key drivers of the economy, in addition to tourism, is exporting labor. Publicly, you have about 2 to 3 million migrants working abroad. I estimated at 2 to 5 million. And this is a key driver of economic growth in the economy that's driving consumption. You've got remittances, which in 2025 were roughly 13% of GDP, or roughly 19 billion. This compares to 2021, when remittances were 8 billion. Equally, FDI is booming. Keep in mind, this is announced FDI, not distributed FDI. So last year, 38 billion, 26% of GDP. It's certainly lower than that, but they don't disclose distributed FDI. But nonetheless, you're seeing investments, at least announcements from the broader region, Korea, China, Russia, Turkey, Japan to a degree, clearly the Gulf countries are fighting for influence in the region, so there's a lot happening. But nonetheless, this is all backed by a de facto put option, which is gold. They've got the second biggest open pit gold mine in the world. They have significant resources, and they also have what will be later this decade the second or third biggest copper gold porphyry mine in the world, which they're in the process of doubling output. But you have to keep in mind that since 21, gold prices have gone from 1,800 to right now they're about $4,800. Equally in 21, they were mining 2.7 million ounces of gold. Last year was 3.2 million ounces. And as a result, FX reserves are 46% of GDP, slipping a bit if you've been following our presentations for a while. Previously, a few years ago, they were about 60% or 55% of GDP. That's coming down because the economy in the past 2 years roughly has gone from 80 billion to 145 billion, according to government estimates. So there's a huge boom going on in the country. And no doubt you send workers abroad, you generate remittances, you have FDI, you have domestic SOE industry, gold production and whatnot, and this is driving consumption. And that means, of course, you've got Starbucks, which just entered the market, Burger King, which just entered the market, and a lot of the foreign chains that are already in the country are expanding to the second-tier cities, so Samarkand, Bukhara, then over into the valley. And this is driving broad consumption, but also in real estate, where you're in general infrastructure. So again, financial services, steel, cement, and consumables. And this is how we've been positioning our investment portfolio since the beginning. Next slide, please. So I guess before I get into this, on the back of how we've been positioning our investment portfolio, is we're seeing these trends gain momentum. No doubt we've been waiting for the rails to be put in place to make the capital markets functional, if you will, and that's begun to happen. Over the past year, quite a bit has happened, but specifically last year, mid-year, the market bottomed, and right now, month to date / year to date, we're up roughly 17%. This is the result of pretty much just more capital coming into the market. So it's something that we've been talking about for years, and it's beginning to accelerate. I still think it's very early days because you look around at the liquidity in the market, which is improving, still nascent, and you look at the issues available, there's a lot more upside here. We're talking about, in my view, 5 to 10 years of upside. Realistically, hopefully we get a nice big bubble in 2 to 3 years with a much larger gain for the portfolio, and then do some rotation out of positions. But for all intents and purposes, people are paying attention to the country, the market. Nothing has happened yet, and we're up roughly 17% this month. So touch wood, we have a very good year ahead of us. And this is all coinciding with, in December, the updated capital markets legislation, which we've been waiting for a previous piece of legislation since 2021 or so, which got scrapped. This supersedes it. This makes the capital markets sandbox permanent, where you've got international custodians and brokers coming into the market. And what's important about this is that you have a handful of brokerages internationally that white label services. You open a brokerage account with them, and you can trade in all the markets where they have brokerage accounts because they have sub-accounts. In Uzbekistan, before this legislation was passed, that was not allowed. Now you have brokers coming into the market where if they choose to join the stock exchange as a registered broker, they can have foreign clients open a brokerage account with them abroad, which allows them to trade all the markets that they do business in and Uzbekistan, or these guys can partner with existing brokerages on the ground and offer custodial services in the sandbox, and through sub-accounts make it so foreigners don't have to come in and open brokerage accounts. It's something I've talked about for years, is the bureaucracy of opening an institutional brokerage account. Those days are effectively gone. So capital can now come into the market. In addition, this decree discussed permission of dual listings and fungibility. So now with the Uzbek National Investment Fund IPO, which is planned for the second quarter of this year in London and Uzbekistan, you'll have fungibility. And then presumably, probably in the fourth quarter, you see Uzbek Airways, IPO, again, dual list as well. So we now have all the infrastructure needed to allow for IPOs and to kickstart the market. In addition, as I think I've mentioned in our last webinar or in my last monthly, is that you're seeing the corporate bond market really get moving. In some cases, you're having multi-million dollar, single-digit million dollar, but nonetheless multi-million dollar bond offerings being fully subscribed for in an hour or two. So again, we're at this tipping point. And then additionally, as part of this capital markets legislation and this presidential decree, the government's focused on attracting at least $1 billion of capital into the capital markets by 2030, which I think will be very easy to do, because once you get Uznef, once you get Uzbek Airways, and potentially one or two other SOEs, you get to have more liquidity, more investor participation in the market. Again, things I've been harping on for years, and that begets local private sector companies to begin to enter the market. They're already entering the capital markets, again, through corporate bonds. But I think phase two, as we've discussed in the past, is IPOs. So everything seems to finally be coming together. It's been a long slog, but we expect to get rewarded for it. And again, with this month's performance, not having done anything on our part to juice our performance, just sitting back and letting foreign capital, presumably mostly foreign capital, come into the market and push up equity prices, we are very, very excited. So with that, I'll pass it off to Vicente Nguyen, who will be talking about Vietnam.
Thank you very much, Scott. Hello, everybody. So first of all, I would like to share with you about the Vietnamese amazing story, our performance, economic achievement in 2025. So as you know, that at the beginning of 2025, most of the international financial institutions forecast that Vietnam will have the GDP growth in 2025 roughly around 6 to below 7% because of the serious tariff from US. However, at the end of the year, the country announced that the GDP growth of the year reached 8%, exactly 8.02%. So they already achieved the target, the year target. What we can see here is most of the international institutions really underestimates the country. How the country can overcome all the difficulties and turn the weakness into the opportunities. Not only in 2025, yesterday, the Vietnamese Communist Party just passed one of the very important economic resolutions that they will keep growing at least 10% per year. Yes, 10% per year from now on to 2030. So in the next 5 years, they target to grow at least 10% every single year. This is a very ambitious plan, but we think that with the higher and the more ambitious plan, the country will have more targets higher target to do. This is really good for the whole country. Go to the next page. So in order to support for the economic growth in 2026 and for the period from 26 to 2030, the public investment sector is one of the most important thing to push the economy. The country strongly, I can say, heavily invest into infrastructure for the long-term growth. They invest not only in highway, not only in power, in everything. So this is only the list of key highway projects. So the total investment capital from now on to 2030 is already more than $100 billion US. Yes, only for one sector, is the road and the railway and the highway. So Vietnam agreed to spend roughly around 100 billion for only the road. Not only that, they also spend much more US dollar for power, for international airport, for everything. So this is one of the most important factor to make sure that the country can grow really solid and rapidly in the next 5 years. Go to the next, please. Regarding to the exports, this is, we already mentioned many times in our report. So last year in April 2025, a lot of economists, a lot of analysts said that, okay, Vietnam will tumble, Vietnam will damage, sheer damage because of the tariff. However, the country already solved that they can turn the weakness into opportunities. And after dealing with US to get 20% tariff, it's become one of the biggest advantage of the country against other competitors like China or India or even Southeast Asian country. So in 2025, the total exports of the country increased 17% from around 400 billion to 475. Particularly, the exports from Vietnam to US increased 28%. Yes, 28%, much higher than 17% of the whole country, to reach the record high revenue, export revenue to US 153 billion US dollar. More than that, Vietnam also benefits a very strong production switch from China to Vietnam due to the tariff. A lot of Chinese company enterprise came to Vietnam, buy houses, buy factory, buy land to build a factory. And according to the national statistic number, last year in 2025, the total FDI from China, Singapore, and Hong Kong. So maybe because China invested into Vietnam through Singapore vehicle, so we total these three countries contributed more than 50%, more than 50% total FDI. So you can say that we see that Vietnam really turned the vision into opportunity. This is one of the key strong point of the country. Go to the next. So with very strong economic growth, very strong fundamental base, it's really have the stock index to reach the all-time high. This is really bullish situation. So the VN index after many years, at least 5 years, cannot surpass the 1200 points level. This is very psychology level. So in January 2026, the VN index already surpassed 1900. And many broker and analysts already estimate that the next station could be around 2500 by in 2026 or 2027. So they are right now very bullish. A lot of local individual investors enter the market. More than 6 million new open account within the past 3 years. So right now, so within more than 20 years, 25 years operation of the stock market, only 10 million account, but in the last 3 years, already 6 million new open account. So this is how local individual investors play a very important role in the market and push the market up. So right now, most of the broker, modern investors look the market is really, really bullish. Go to the next, please. So even though the markets went up sharply last year, but most likely because of the Wind Curve position. Wind Curve is the highest weighted stock in the index with roughly around 16%. So last year, Wind Curve increased 7 times. So 7 times means 700%. And because of the high valuation, more than 100 times, the reason why our AFC Vietnam didn't touch it. And last year, we sadly say that because we underperform the index, most likely there's 2 things. The first thing is the Wind Group, and the second thing is the export stock. So our export company reported last year the record high in revenue, record high in net profit. For example, TNG, they just issued a fourth quarter financial results a few days ago. The net profit in the fourth quarter increased 50%, and the total net profit for the full year 2025 increased 30% to reach the all-time new high level of the company. Even though the very, very good business performance, but the stock price increased since 2024 until now. So right now, the stock price of TNG is still below the 2024 level. A reason why the valuation of TNG is only around 6 times on earning. And this is incredibly low. Yes, we have to we already suffered the underperformance last year, but we are a value investor. We strongly believe that sooner or later money has come back to the value stock. This is our top 10 position. Most of them you see that below 10, only FPT is the technology company with 20% growth in net profit every single year. So 14 is still very cheap. So we strongly believe AFC Vietnam has a huge potential to move up. So it's the time to invest. Myself, I just invested into the fund a few days ago. Keep increasing my personal investing in the last 32 quarter. So thank you very much for listening.
Thanks everybody for your as always interesting and insightful presentation. We will now answer some of the many questions we have already received from the participants in the next 25 minutes, but you can still submit more questions during this Q&A session through the Q&A button at the bottom of the Zoom screen on your laptop, PC or mobile phone. The first question is for Ahmed. Let me see where the question is. From one of the investor. What is the impact on Iraq, on the Iraqi economy? When seeing what's going on in Iran, on the Iran issues and developments there?
Okay, thank you for that. Actually, that's a very, very interesting question. I mean, to put it in perspective, economically, Iran matters to us in two ways. The first, we import gas and electricity for them, for the generation of electricity. So we import electricity and gas. They supply sometimes, depending on the season, up to 40% or high 30% of our electricity consumption. So that is something that affects us. That's been affecting us negatively for the past 2 years. Because Iran, I mean, one of the reasons why why the population is rising is the economic stagflation. And one of it is the badly managed state of their own power supply. So that will affect us in a negative way. The other one is that they are one of top 3 exporters to Iraq. The top is China, followed by Turkey, and then followed by Iran. So together they account for 60%. So we do something like $10-12 billion a year worth of trade with them. So far, from what I hear, the reports that has not been affected as yet. I would imagine, I find it very difficult to affect unless you have mass demonstrations, mass sort of boycotts in Iran, which so far hasn't happened, but then obviously it's very early days. But I think the effect that Iran can have on us is much bigger in a different way. I expect the regime, whether it gets modified a little bit or whatever happens internally, they would be looking at internals as opposed to looking at the outside area. And I think that lowers the tempo of confrontation in the area, and that is a positive thing for Iraq overall. But directly so far, yet to be seen. I hope that answered you. If you want more, I'm more than happy to answer in a separate email.
No, I think that's a perfect reply, Ahmed. Okay, next one for Ruchir. So apparently this person who asked the question is based in Europe, where everything is about Trump and the US and Greenland, I guess. Is there any global scenario for a larger war that you see jeopardizing your optimism, or is it right to see this is a largely domestic play, including tourism across your markets?
Yeah, that's a great question. So, I mean, just to, put in perspective, many of the countries that we invest in, they faced a pretty tough time from all the global macro issues that happened in the last 25 or 6 years, the pandemic, the war in Ukraine, the very aggressive US Fed. So because of that, I think many of these countries have learned their lessons the hard way, and they've taken on the tough measures from a fiscal perspective, from economic perspective, from a political perspective. And that's put them in a stronger position. That's why we're seeing these gains right now, not just in the equity markets, but broadly in the economy from a positive sentiment on the ground because of the tough decisions they've took, especially in 2022 and 23. So yes, barring any major I don't know, we can't foresee a major war or something like a global pandemic, I don't see this optimism coming down the countries. And even if you have some certain short-term issues with the global economy, or especially what happened with the tariffs in April, these economies are much more well positioned to overcome some of these issues, and they were much better placed compared to especially 2022 and 23. So yes, I mean, barring any unforeseen global macro event, which I guess we can't predict, the optimism on the ground remains very strong. And just to put that in perspective, also domestic, it's like the question asked about the domestic story. It's a very domestic driven story in our economies, especially in South Asia and Central Asia. For example, especially in South Asia, Bangladesh, Pakistan, Sri Lanka, exports as percent of GDP is about 10 to 15% of GDP. Exports to US as percent of GDP is between 1% to 3% of GDP. So even though there were some concerns when the tariffs were on in April, I mean the higher tariffs, it wasn't that much of an impact compared to some very export-dependent economies in Southeast Asia. So yes, very domestic-driven stories. The momentum is very strong. So yes, my optimism stems from the fact that they've taken all the hard decisions and they're bearing the fruit of those hard decisions they've taken over the last few years. So therefore, domestically, I don't see any issues on that front. And also on the report that I mentioned to you, in the report we wrote for the outlook, we mentioned the key concern for us is any global geopolitical event. If that happens, but again, I think it'll be a short-term impact because, like I mentioned, these countries have overcome many issues in the last 5 years, like the pandemic, the war in Ukraine, high interest rates from the US Fed. So yeah, I stick to my argument that these countries their economic cycle has only begun now, and the outlook for 2026 and for the next few years is quite strong.
Okay, thank you. Then another question for you, Ruchir. What are the main sectors you are positive in Bangladesh?
Yeah, that's another good question. So I mean, broadly, as I mentioned in my comments, the Bangladesh economy has not done much for the last few years. So many sectors have been beaten down or have not been delivering results for the last few years. So if and when you see political stability and interest rates come off and the market do well, the economy broadly recover, which is growing below trend now, then you'll see a broad-based recovery across the board in many sectors of the economy. So yeah, having said that, I think sectors which can really stand out which benefit a lot when the economy sees a strong recovery or a rebound is the banking sector, and we saw that in Sri Lanka as well, 2024 and also 2025. For example, private sector credit growth in Bangladesh is only 6% right now. I mean, that's extremely low. It used to be double, mid-teens, 14, 15% when the economy was doing fine. So, once the economy does well, you see a bit of a recovery, then I think the banking sector can outperform. So it's not like the others. I mean, like I said, you'll see a broad-based recovery in many sectors on the listed space. I think the banks can outperform. And then, of course, domestic consumption can also come back because high interest rates, high inflation, political instability has affected domestic consumption. So, for example, consumer discretionary, those spends are down. That could come back. So consumer appliance companies, consumer companies with stronger brands, people have been downtrading to less known brands because of lower incomes. Once the incomes get more stabilized, they'll go back to more well-known brands. So I think banks can outperform, and also domestic consumption plays. So pharmaceuticals, healthcare, consumer goods, consumer discretionary, consumer appliances, those kind of companies can outperform once the market recovers. And the strategy is well positioned. So we own the larger positions in the strategy are basically banks and consumer companies.
Yeah, I mean, there's another very similar question which goes directly into this. In what industries are you positioned in Bangladesh? How might this change in the near future?
Yeah, as I was mentioning, as I mentioned in my comments, we've been increasing our weight to Bangladesh in 2025 and also in the first 3 weeks of January. So we increased our weight to banks last year, 2025. And just last week, we bought a new position for the strategy in a consumer discretionary company, is the largest consumer appliance manufacturer in Bangladesh. They manufacture and distribute air conditioners, refrigerators, TVs, number one brand. And, that demand obviously is much below trend, much below pre-crisis levels, pre-pandemic levels. So once demand starts coming back, I think that company can do quite well. And then, of course, as I mentioned, banks will see a good recovery. And also, our biggest position in Bangladesh is a pharmaceutical company. Again, people have been cutting down on not I want to say cutting down healthcare spend, but cutting down probably instead of buying a well-known brand, you're buying cheaper brands because of your pressure on your incomes. And as I was saying, as income levels improve, you will see people go back to much well-known brands. And that's really the same thing we saw in Sri Lanka as well. You're seeing, especially on the consumer side, many companies where consumers downtraded in Sri Lanka, especially 2022 and 23. Now their income levels are back, or disposable incomes are more stable, or have been improving for the last 12, 15 months. You're seeing they go back to the brands which are well known, which they were consuming before the crisis, and you're seeing very good results from these companies. So yeah, we've positioned the fund towards banks, consumer/healthcare, and just recently we bought this consumer brands company just last week.
Perfect. Now for Vicente. That's a really good question. What is the debt situation for Vietnam, and how will they fund the large infrastructure projects you showed?
Yeah, thank you very much for the question. It's very interesting, but a lot of people doubt how Vietnam can finance for those ambitious projects. But actually, Vietnam has very low public debt. At the current, the public debt on the total GDP is below 40%. As I remember, exactly around 36 or 37% in 2025. So this is really, really low compared to other countries, even in the region or over the world. And another thing, Vietnam really improved the state budget balance. Vietnam right now is one of the rarest countries in the world had the state budget surplus. So in 2024, after I think 30 years, we had a state budget deficit. We started to have state budget surplus the first year in 2024. And but in 2024, we have the surplus is not very big, around $1 billion. But in 2025, the state budget surplus increased sharply from $1 billion to $10 billion. The $10 billion is roughly around 2% GDP. So improving the state budget balance and the low public debt on GDP, to those kind of factors can make sure that Vietnam can finance their ambitious project for the long term. Yep.
Okay, then from another person, 2 questions regarding Vietnam. Which positive or negative surprises do you expect out of Vietnam's National Party Congress, which will be this week?
Okay, regarding to the political, it's very sensitive in Vietnam. But I saw on some betting website in the West that Mr. Tholam got the 93% to be re-elected. And in our country, on rumor, we also said, okay, Mr. Tholam will be re-elected. So Tholam is a man of doing things. So he do very aggressively. The reason why the economy grew very fast last year. And he also the only one in the last 30 years dare to make 10% per year for the 5-year periods. No leader in the past dare to make that target. Normally, the culture that they will make low target and then they achieve that target is mean they complete their mission. But Tholam is the completely different people. Different kinds of leader. He make very high target and try to overcome that target, create the difficulty and overcome it. So this is the way how the country can grow fast. He also the one who one of course many people, but he's the key person who issued the resolution 68, and recently the resolution 79. The first one is support 100% for the private enterprise. The resolution recently 79 is improving the effectiveness and the capacity of the state-owned company. So with those two resolutions, it's created two engines to push the economy up. So I strongly believe if he will be re-elected, the target 10% per year in the next 5 years is possible with him. This is what I feel. Yep.
Yeah, there was a very similar article in The Economist, exactly what you're talking about this election of the ongoing next president.
Yeah.
And then the second question of the same person, what key risk or negative signposts are you watching out for regarding Vietnam going into 2026?
Yeah, one of the risks in Vietnam now, there's two things. The first thing is the external risk, is the geopolitical all over the world. The war happen everywhere. So I think this risk can be applied to all the country all over the world. And regarding to the internal risk, so at the moment we see, because Vietnam's grow very fast, and Vietnam economy grow on very strong grow of credit line. It means loan, bank loan. So right now the bank loan is much higher than the GDP. So the reason why the internal risk could be the inflation. So when they pump too much money into the market to push the economy up, inflation can come back and increase. So however, at the moment, in 2025, the inflation is really under control with 3.4, 3.5% is much lower than the GDP growth. So, however, it's still a potential risk for Vietnam in 2026. So the State Bank already mentioned about this risk many times, and they watch it very closely, the inflation.
Okay, thank you. Now a question for Scott. I was expecting actually many more questions after this kind of performance this month from the audience, but here's the first one. What is the potential for private sector IPOs in the market? And then I think more or less we have a similar question for Iraq, if Ahmed could answer after Scott.
The problem historically in the market has been that you get a higher valuation if you're doing private equity, because there was no liquidity. And really, until probably a year ago, being kind, maybe even 9 months ago, if you were outside of, say, TBC doing a bond offering, if you wanted to place 5 million in the market, you effectively couldn't. Now you've got people talking about $30 million bond offerings. And you've had a handful that are closer to 10. So the market has completely changed. Same thing with IPOs. And we've always said that first you need the rails to be in place, which they are. Then you have the state-owned IPOs to prove that the market can function properly. And then as you get a revaluation, as we're seeing right now, you then presumably get private sector IPOs into the market. The question is going to be, are they able to IPO based on their corporate governance and their structures and whatnot? So of course there will be a cleanup process, but definitely, for example, you have something called the IT Park, which was set up by the government, and the focus is mainly tech-oriented companies that are driving exports. So the government's focused on generating a few $1 billion worth of exports per year from services and tech, and a lot of these companies could easily IPO and raise $5-10 million. So I think that's where you probably start to see the pool come from after these SOEs IPO. So certainly there's huge potential for private sector IPOs.
And in Iraq, Ahmed, so here the question is IPOs, especially privatization of state companies.
Yes, I think, thank you for that. I think if you asked me this 2 years ago, I would have said highly unlikely, given that these are believed to be state assets, and there's always a fear of selling the state assets cheaply in IPOs and so forth. However, 2 things or 3 things really change that. The first of all, very quickly, is a lower oil price environment for the next couple of years, if not longer. That will probably encourage the government to seek to control costs, and state-owned enterprises are legendary in terms of cost overrun and wastages and so forth. So that's a possibility. Second one is that there is foreign money coming into Iraq. And there's one thing which I haven't talked about, but I will talk about in the future very closely is one, foreign banks are coming into Iraq through buying equity stakes in Iraqi banks. Doesn't answer you directly. But the other one is a deal that the Securities Commission signed with the Abu Dhabi Stock Exchange. And that is to allow, very similar to what Scott is talking about, to allow investors in the Abu Dhabi Stock Exchange to easily buy Iraqi stocks as if they were buying local stocks, bypassing all the complicated paperwork and also the complicated to do with custodianships and so forth. It's still an ongoing. I don't know exactly when it will happen, but I know two of Iraq's first brokers have done that. So as they need to raise more funds, one way or the other, and as foreign capital comes in more easy, which I would imagine sometime the next year to couple of years, that will be quite likely. And I think we will have some interesting companies coming in with that. So I'll end it there. Thank you for that.
Yeah, talking about this Tawadul thing in
Yeah.
Abu Dhabi, you mentioned it. I was in
Yeah.
Oman and at a conference, and there was also a representative, a lady from the Abu Dhabi Stock Exchange, and I had a long talk with her. So I mean, it's a big thing. It's already working in Oman, Bahrain, and Qatar, I think. And they're talking about other markets they have to add on. Basically, the entire world. They want to do it if it's possible. And that's the end goal. So they have already signed MOUs with Iraq and also with, and it's also working in Kazakhstan so far I know. It's also Kazakhstan is online, and they have also signed the MOU with Tashkent Stock Exchange. And she told me that they're also talking to Hong Kong Stock Exchange, London Stock Exchange, and New York Stock Exchange to connect everything through their bourse so that they can do that. Don't ask me. I asked her, how do you want to make money? I don't. She couldn't reply to or answer me this question. Talking about answering question, there's one question for me now. Thomas, you have some poor play single country funds and fund covering multiple countries. What is the determinant of creating further single country funds? So basically, my vision is that we want to launch funds which make also money for our investors. That's the most important thing. So we want to launch funds when we think the timing is right. So let's say like we did in Vietnam, right at the bottom of the also tremendous bear market, or in Iraq also after a tremendous in Vietnam we were right. In Iraq we were wrong. There was also a bear market. Unfortunately, we started to launch the fund at the beginning of the bear market. So it was the 2-3 difficult years. And Uzbekistan, we were right when the market opened, foreign repatriation was possible, and we saw the opportunity in Uzbekistan. It took some time. First 2-3 years were great. Then last 2 years, unfortunately, 23 and 24 were not that great. Now, late last year, as Scott said, and I strongly believe the same, that the market has bottomed out in Uzbekistan, and we will have a great future. So that's the first thing. So we need to believe that this fund, this new fund, will make money for the investors. And the second thing is, and that's a very, economic and business minded reply. We need to have at least $5 million of investor interest at the start in order to make this new fund or strategy workable. And then the third thing is also, let's say, and there was a question, the follow-up question, related question, what is in your business development pipeline? We were seriously talking about doing a Sri Lanka fund, and we had a person in mind who could help us to raise money and also help a Sri Lanka national to also help us to manage the fund. But unfortunately, the last second, he jumped aboard and changed to did a new job, different job. So we had to put it on hold. So Sri Lanka is something which is on the radar. If we see interest, and I think with Ruchir's knowledge going on the ground there more or less every couple of weeks. So I think we have the expertise there. And we could hire 1 or 2 analysts. So that is certainly in our business development pipeline. And now I had already 1 or 2 questions. Other people asking me about Iran, what's happening there. Iran would be also, of course, in interest, but that will be a long shot because we are looking also at Syria to maybe start as something because there the sanctions have been lifted, but I mean the governments have lifted the sanctions, but in many companies there's still a lot of the sanctions. It has not arrived a message in those companies that sanctions have been lifted. So I tried to send by courier the documents to Damascus. It was for 1 month at Milan Malpensa airport stuck for security reason and for whatever reason. So it took me dozens of phone calls to move this parcel from Milan Malpensa airport to Damascus. So that's Iran is a very long shot. I mean, would be a great opportunity, but I think with all these sanctions in place, it will take many years until we could really legally and in a proper launch a proper fund. So that's our other question. So we are already overrun, but one last question, interesting question for Scott. In the Tashkent Stock Exchange, some shares trading has been temporarily suspended. Is this due to new regulation? And will this impact shares for the performance within the AFC Uzbekistan strategy fund?
So no, this is not new legislation. This has been, I believe, forever. Effectively, when there's highly unusual trading, I think a few of the banks were up 100% day after day after day. So the regulator just halted trading so they can investigate what's going on, make sure there's no manipulation. For those of you that have been following us for a long time, I think it was in the end of 2020 into 2021, there was a leasing company which went up 199,000%. And then it subsequently crashed. So they just want to make sure there's no manipulation. So no, it won't have any effect on us at all. And I believe after 10 days, they'll then lift the halt and then trading will recommence.
Okay, great. Thank you very much. And just another question popped in. I think it's a very interesting question. I answer it. If you own $100, how is it allocated between your different funds? So I can tell you until end of December, 50% of my assets were in the Uzbekistan fund. It's now 60%, and the others have gone down. And the second biggest position is actually in the Iraq fund. Okay, basically this concludes our webinar today. Since we still have some unanswered questions, we will answer them directly by email. And if you have further questions, please send them to us. You can always reach us by email. I hope you enjoyed this webinar. We will continue to hold quarterly webinars later this year, and we will announce them in our upcoming monthly newsletters. And don't forget to go on our website or on our YouTube site. You can see the videos and the previous videos of the webinars. Happy Chinese New Year, Kong Fa Choi, and good luck with investing.